Now, the death of George Floyd at the hands of a white police officer in the United States has opened up a lot of conversations about black representation in almost every sphere. This is not a movement just about violence against black people, it is about, quote-unquote, the system. This number should shock you, 0.4%. According to Harvard University, that is the proportion of black people who got money from venture funds between 1990 and 2016. Less than 0.5% in the period where money was really being freed up because of the emergence of .com. But disparities like this go back to the birth of the nation, really. Equal opportunity has always been denied to the black community. For example, the net worth of an average white family is $171,000. For a black family, it is roughly a tenth of that, $17,000, which means when black people try to start a business, they don't have access to that existing family wealth. But it's also estimated that the spending power of people of colour in the United States is about $1 trillion, and so some are now trying to redress the balance and properly recognise the lack of diversity in the tech and financial sector. One particular venture capital group, Impact X Capital, has invested in 17 startups and is raising $100 million for a new fund. Eric Collins is the CEO of Impact X Capital. He's with us from London now, and it's a pleasure to have you with us. I know that you are all about other people and finding their stories. Was it difficult, though? I mean, the crux of what we're talking about is the idea of money not making it into the hands of people of colour. Was that your experience?
So my experience is, I think, shared by a number of other entrepreneurs. What I found before becoming a venture capitalist is what was reported in the Kauffman Fellows research recently, that between 2001 and 2018, that we find that black and diverse entrepreneurs actually have a much harder time raising capital in the first place. But once they actually raise capital, there's an interesting dichotomy. What then happens is they actually are able to raise more capital than their non-diverse counterparts, and in addition, they return more capital to investors, 30% more capital after they actually exit. So the interesting thing is, I think that there is truth that there is challenge in terms of raising capital, but then there's this mythology that black entrepreneurs and diverse entrepreneurial teams don't return at the same, if not a greater rate. And the facts show us, studying 260,000 founders, studying 20,000 startup companies, that in fact, diverse entrepreneurs and diverse teams actually deliver more and are able to raise.
So what is it behind, you say the facts say that, what is behind those facts? What is it that means that those returns are as good as you say?
I think behind the facts, Kamal, is a very interesting sort of complicity. And I've said this before, if you look at venture capital is very, very interesting at the moment among most people. The idea that you can create in a single generation huge amounts of wealth. Think of Jeff Bezos and sort of the richest person in the world right now. That is created through technology. And that technology business that he built called Amazon started off with venture backing because banks wouldn't actually fund his ideas. They couldn't see the future. He was able to raise money through venture capital. What we find, though, is that there are generally funds that are not coming from diverse investors that are going into those organizations, and that indeed the venture capital industry itself shows itself to be one that likes pattern recognition. So if there are white men who are making decisions, they make decisions that lead to an Amazon, more white men are backed in order to make decisions to back more white men to lead to more companies that are like Amazon and others, because that is a belief. And what we don't find is that there's either pressure at the top of the organization within themselves to say we should do anything differently. It feels as though what we're doing is right. We are the West Coast. We are Silicon Valley. Everyone else in the world envies us. Why should we change and incorporate women and people of color into our decision-making ranks? Why should we invest in black and diverse entrepreneurs and women-led companies? Because we have found that if we back Microsoft, if we back Amazon, if we back Google, if we back Facebook, all of those are huge companies, and all of them are run by white men, invested by white men. The challenge is, if we don't break this, and we don't have people like LPs, the endowments and the pensions that are putting money behind these organizations, forcing these organizations to have a conversation about could they have had better results, which the Kauffman research that I mentioned earlier actually refers to. We could get better results if we were using diversity. Then we will never get a change in this. And that complicity, this sort of idea that what we're going to be doing is the same thing forever and ever, continue to be one of the hampers to our ability, hampering factors to our ability to actually grow really great businesses.
You used an interesting word there. You said forcing these companies and people to take a look at themselves and question what more they could be doing. That's not great. I mean, I just think of it on a human level. It's not great that people should be forced to think about that, because these should have been things which have been thought about anyway. In fact, arguably, they shouldn't be thought about at all in an ideal world. I know we don't live in that, but really, none of this should be a hurdle. What is it? Is it structural? Is it unconscious bias? What is it that's forced us to do
Well,
it?
you make a very interesting point, and you and I are in violent agreement about this. This should not be something that needs to be thought about. But when I was in Boston and I received my first term sheet back 20, 25 years ago, there were less than 1% of venture capital investing went to Black entrepreneurs. Less than 4% went to women-led teams. It is now 2020, and the same numbers exist in Europe, in the United States, that less than 1% of venture capital funding goes to Black entrepreneurs and less than 4% goes to women-led teams. That is a number which hasn't changed over 20 years. I love the opportunity for incentives. When I build a business, I try and incentivize founders to stick around, key employees to actually contribute in ways that seem almost superhuman. But when we come to the situation of venture capital being invested, it appears that incentives, whether they be government-backed or others, have not led to the result of a more diverse set of decision makers and then allocation of capital. So I'm getting farther and farther away from my perception that there are incentives that can actually exist, and that there needs to somehow be more of a forcing function. And that forcing function, whether it be quotas or others, needs to be taken into account. And here in the UK, where I sit here in London, there actually has been forcing function that's been taken into account with respect to women on board of directors and in other positions in management. So we do see that those exist. If we go all the way back to the 1960s and 70s in the United States, we had affirmative action, we had things that went along with the Civil Rights Bill. In order to make sure that the systemic issues, we might not be able to change people's hearts and minds. We need to change their pocketbooks, which maybe will drive some different solutions and different sort of perceptions of the future, or what their actions are being taken. But quite frankly, if we can't get to the point of getting their hearts and minds to change the incentives, then we need to because we can't continue down this road for another 30 years.
No, exactly.
One of the reasons why I think affects this at all.
Eric Collins from Impact X Capital. Great to talk to you. Thank you.